Friends, today I just wanted to give an outlook on the current market scenario. As you know, the West Asia crisis has impacted crude oil movement because Strait of Hormuz dictates 25% of the oil movement across the globe. And because that is being blocked, there is a increase in the crude oil price. Crude oil price 3 months ago, before the war started, is around 60 to $65, which is very fair, and most of the economies are doing good, which are importing oil. But now it has jumped to $100 to $120 within that range, which is a challenge for countries like India, because for every $10 increase in crude oil price, the government has to shell out close to $15 billion in the import bill, which is a challenge. But that is the reason why government is asking us to reduce the consumption of oil and postpone the trips, and try to make some prudent measures so that our impact is lesser. Currently, as you know, the in spite of the increase in the crude oil price, it has not been cascaded to the common man, but it can happen anytime soon in the shorter term. But now we will also look at what are all the other way of looking at this crude oil price increase, how any of the other sectors which will get benefited out of it. For example, upstream companies which used to drill and produce oil, they will get benefited because they will actually have a higher revenue because of the higher crude oil price prevailing in the market. And companies which are into energy, especially in solar, wind, and green hydrogen, they will get benefited because of alternate fuel sources. Most of the companies will look into, and companies which are into energy infrastructure will also get benefited in this interim period. And also, if you look at companies which are into EV manufacturing will get benefited because they will also see some traction because of the sustained war scenario which we are experiencing. And most importantly, because of this geopolitical tensions, companies which are into defense and manufacturing will also get benefited because every country will expand their spend on defense, and they will also be adequately have that infrastructure ready due to any challenges which they can face. This is happening across the globe, not only in India. Fine. So, on the thing, you would have also noticed that the market has come down from the previous peak to a reasonable levels, in spite of having a good quarter earnings in the last quarter, that is the January March 2026 quarter. The most of the companies' earnings have been quite positive in spite of all the challenges. And since the market has come down, our price to earning PE multiples have come down, even though the future earnings growth is better anticipated because of good consumption, and as well as having a spending economy ecosystem because of the digital and e-commerce and related stuff. So, when we on par with the other emerging market economies, our premium has come down. So, which means that once this war situation comes to a standstill or gets over, you will see all the FI money coming into India, because India is the growth capital to the world. As you always know that India is one of the top 10 economies of the world, which is growing at a much faster rate thanks to the young population which you are already having, and which is a good working population, and also our consumption is also going up. And in spite of the oil price increase, the CPI is within the same number, which recently it reported as 3.4%, which is not gone up beyond the 4% based on the RBI's projected numbers, right? And one good thing what I noticed is that most of the promoters are also actually buying back shares from the retail market. So when the promoters will buy back shares, when there is a good earnings momentum is there, and they wanted to enjoy the profits. They wanted to dilute the equity ownership. So this is also a very good sign that Indian market will do well in the near future, even though in the short term we will have some challenges. And the good thing is that when I looked at some of the commodity data, the copper price has increased gradually, which means that copper is one of the industrial metal which is being used across multiple sources. So the demand for copper is increasing. The base metals like aluminum, zinc, which are all into industrial activity, is increasing, which means that the purchasing manager index is actually more bullish on ground level economic activity. So all this, what it denotes is that this is a very temporary phenomenon, and investors should not be so worried about their market volatility and the prices going down, because this is a interim period, and investors should also allocate money in those sectors which they are not present in, which I have recently highlighted also, something like the energy sector, defense and manufacturing, and other commodities related stuff. So, and you actually buying companies at a reasonable discount than their earnings, because market is actually currently not showing the real picture of the company's earning growth because of the uncertainty which is prevalent in the market due to the current geopolitical tensions between the Iran, US, and Israel war. I hope this will come to a standstill, and things will get into normalcy. And in the meantime, don't do any panic selling, because investors who stay put will always reap the benefit. And whenever you are in doubt, you wanted to have a review on the portfolio, you have any clarifications, questions, we are just a phone call away. Myself and my team are more than happy to assist you in this crisis period. Do get in touch with us. Thank you.